Investing shouldn't have to be difficult, and by the end of this video, it won't be. We went over the 2-fund portfolio and the 3-fund portfolio previously, linked above. But some people aren't really that lazy, or they like to have some exposure to real estate. And who could blame you? I love real estate. Look no further than the Core 4 portfolio. We'll go through 2 examples of how you could build out a Core 4 portfolio, including building our own version of this particular lazy portfolio. Let's begin. As the name would imply, you generally use 4 exchange-traded funds for this portfolio. 1 bond fund, 1 total U.S. stock market fund, 1 international stock market fund, and finally a real estate investment trust fund. In a common 80% stock and 20% bond allocation, you typically have the 80% of stocks controlled by the U.S. stock market, international market, and REITs in descending order. Ferry made a common Core 4 portfolio build that has a very specific asset allocation, but the REIT is usually less than 10%, which is silly to me because I love REITs. So I'm going to use Ferry's suggested funds in our example, but in the following proportions: 50% US stock, 20% international, 20% REITs, and only 10% bonds. In his Core 4 portfolio, Ferry uses VTI to track all US stocks, VXUS to track all international stocks, VNQ to track the American Real Estate Investment Trusts, and BND to track US bonds of multiple kinds, including both government and corporate bonds. In 2020, Ferry's choice of funds got us a return of 21% for VTI, 15% for VXUS, minus 6% for VNQ, and plus 6% for BND, getting us a total return backtesting this portfolio of 12.9% in 2020. For a 10-year average, Ferry's choice of funds got us a return of 254% for VTI, 64% for VXUS, 122% for VNQ, and 16% for BND, getting us a total return backtesting this portfolio of 165.8% for the past 10 years. I also made a Relentless Growth specific version of the Core 4 portfolio. While I can't say I'm wholly ignorant of stocks, I'm also certainly not as smart as Ferry, and some of these picks I literally did at as close to random as you could get. The point of me doing this is not to tell you what to buy, but to show you that you don't have to be exceptionally smart or lucky to invest successfully. Just don't invest money you can't afford to lose, and don't be a complete doofus. I wanted to track the S&P 500 specifically because I know it's generally done better than the US stock market at large, so we use SPY as our largest holding. I literally just wanted to pick stuff that's different than RICS, so we're using IXUS instead of VXUS. The difference here being that one is from iShare and the other from Vanguard, but both track the same index. Be warned, IXUS does have higher fees, so if you're picking between the two without checking their returns just yet, VXUS is probably going to do you better. I chose VNQI as the non-US REIT, again, just to be different. And then I chose VCLT because I wanted to target corporate bonds specifically over government bonds because they tend to get higher returns, which was explained in our last lazy portfolio video. But in this case, I went with long-term bonds specifically because I also know we're using less bonds in this particular portfolio, and the point of the bond component of the portfolio is to provide stability more than it is to provide maximum gains. While the US ETF and bond ETF for Relentless Growth are probably stronger, without checking yet, they are probably stronger to a lesser degree than the REIT and international ETFs are weaker. So in this case, I'm expecting the Relentless Growth portfolio to have a slightly weaker return. The point being that when I choose these things at almost random, the end result will still be positive, so you need not fear the prospect of investing. Alright, let's see how we did. In 2020, Relentless Growth's choice of funds got us a return of 18% for SPY, 14% for IXUS, minus 5% for VNQI, and 9% for VCLT, netting us a total return backtesting this portfolio of 11.7% in 2020. For a 10-year return, Relentless Growth's choice of funds got us a return of 251% for SPY, 70% for IXUS, 60% for VNQI, and 118% for VCLT, getting us a total return backtesting this portfolio of 153.3% for the past 10 years. As predicted, the Relentless Growth selections had a lower return than Rick Ferry's choices, but not by a huge margin. This just goes to reiterate that you don't have to be a genius. All you have to do is don't spend money on stocks that you can't afford to lose, and don't be a complete idiot when you buy them. Also, hold in the long term, because you could buy a really good stock and then next week, I don't know, short sellers decide that it's going to be the opposite of GameStop. If you haven't started yet, there are links to some investing apps down below in the description. When building your own portfolio, realize that past returns don't guarantee future returns. And in these particular examples, I'm not sure if Morningstar assumed you reinvest dividends or considered taxes on those dividends. Do not invest money you can't afford to lose. In general, if you're more risk averse, make the bond allocation stronger, and if you love dividends, consider a dividend-focused version of the above ETFs or increasing your REIT allocation. Hindsight is 20/20, but here's the optimal selection for this Core 4 portfolio and asset allocation based on the past 10 years of funds that each of Rick Ferry and Relentless Growth selected. This would be VTI at 50%, IXUS at 20%, VNQ at 20%, and VCLT at 10% for the past 10 years, which would have resulted in roughly 177.2% return. If floor funds isn't really your jam, consider looking at our past lazy portfolio videos on the channel. Next, we'll cover a simple dividend-focused portfolio, so subscribe and tap the notification bell if that strikes your fancy. You only have one life to live. Grow it relentlessly.